Hi, Edward. It's great to have you on the show today. First and foremost, can you just give me a bit of background on who you are, where you've come from, and what you're doing currently?
Yeah, no, thank you so much for inviting me. It's a real pleasure to be here. I'm just hoping that for listeners that having two Edwards in these conversations isn't too confusing. I don't get many Edwards, so it's quite nice to have another Edward. But yeah, lovely to be here. My name is Edward Keelan. I am a partner with Octopus Ventures. Octopus Ventures, one of the most active venture capital firms across Europe. I've been with Octopus Ventures now for about 18 years. Fairly good stint
Wow.
in the investment. Yeah, I know. I would say I don't look it, but I do. Yeah, my focus is I look after our software team. So the team that is investing in software companies. So we run a fund that's around about $700 million in total. So super active, late seed through to Series C investments. Trying to do a deal a month, everything from sort of £2 to £20 million. And obviously during my time looking after the fund, I've spent lots of times on boards of software companies, seen various revolutions, technology revolutions that have been going on. And then outside of my work with Octopus, I also lecture at Oxford University in entrepreneurship and in early stage finance.
Amazing. Now, I'm going to specifically talk about product market fit today. I got in contact with you after reading a few of your blogs on product market fit, and
thank you for reading those. I thought it was just my mum.
Yeah.
I saw I got an extra viewer. I was wondering who that was.
Throw it out there, and you're never sure what's going on once it's up. Right? It's it's good to have a bit of feedback, but it's an area that I think is not a dark art, but I think very misunderstood. When I'm speaking to a lot of people, they say, yeah, we've got product market fit. We've got 5 customers now. I try to explain to them that there's a lot more to product market fit than just getting your first customers. So from a VC perspective, what do you think the importance of product market fit is?
I think it's really important. Somebody says like a rhinoceros. It's like everyone knows what it is, but it's quite hard to define. And I've had a go in the past to sort of looking at and defining it. And I think you can kind of define it in such a way as saying almost like what it isn't is almost easier to say what it isn't. But number one, to have product market fit, you have to have a clear vision. What does that mean by like a clear vision? It's like, what is the problem that you're solving for? And does your vision really solve for that? Number one. And is it a solution to that problem that those customers want? I think on the next sort of scale is once you've got the vision, are you actually kind of engaged with customers? So what does that mean? It means that you might have a great vision. I often use like, say, Google Glasses as an example of this. It's like, I don't know what the problem was, but the vision that they had for Google Glasses was that everyone was going to wear glasses and you could go around and you could Google search all the kind of things that you looked at. But the problem was there was no customer traction. So you didn't have any kind of traction within your customers. So good vision, but no customer traction. There's a good blog on this. Can't remember exactly the author, somebody at Bessemer, but they talked about that being like a sexy story, like cool, sexy story, but nobody actually wants it. On the other hand, where you've got like little vision, but you're starting to get customer traction, that's kind of like a revenue story, revenue centric. And I would say you're getting a lot of that with AI companies right now. You sort of say, what do you do? Okay, well, I'm a consultancy business that is just building applications for companies. It's like, okay, we haven't really got a particular vision here. There's no product as such, but you are winning customers. So you can actually have customer traction without having product market fit. It might be a great consultancy business. That might be fine for you as a consultancy business, but don't believe you've got now an investable proposition because you don't have a product vision to go along with the revenue. And so what you want to end up with is both that vision, problem solution, and you need the customer traction coming together. And there doesn't have to be huge amounts of customers, but clear buying signals from those customers. And that's when you end up in product market fit. And then I'd add a third layer to that, because you can have product market fit without being a VC proposition. So my wife runs a little restaurant, unbelievably popular, got massive waiting list, but it's just her. It's not scalable. So it might be a fantastic business. I would say problem solution. People want great dining. She's absolutely delivered that solution. People want traction. We've got tons of customers. We've got a waiting list into the thousands, great customer traction, but it's not scalable. It is just her, which is fine. It's great business, but it's not VC backable. So I think that's kind of like the third element of product market fit that often gets lost, which makes something go into that sort of VC backable state.
Okay. Interesting. I've never, well, before I read your blogs, I've never heard that vision piece attached to product market fit before. So it's like fascinating to hear someone like define that. Like it makes sense, right? Because that follows through on the product delivery as well as the go-to-market. Being able to serve those customers, I think, is a key point in achieving that product market fit.
Yeah, I mean, I talk a lot, and I don't know if it's one of your questions, obviously a lot of my blogs are around losing product market fit, but that vision kind of element of it is very important around how companies can lose product market fit. Because what happens is, I don't know, you develop a application for the healthcare industry, and it's a very clear vision. There's a problem with the healthcare industry. You've solved that problem through this AI application layer for the healthcare industry, and everything is about solving that. And so you've got clear vision. Then you're winning customers, you're getting traction, you're signing up, I don't know, doctors, or you're signing up nurses, you're signing up whoever in healthcare is needing this application. And then all of a sudden, I don't know, a wealthy bank comes along and says, oh, that looks interesting. And this is what happens when you're a successful entrepreneur, and I know you are, so you'd have this, is that as soon as you become successful, everybody wants to be your best mate. And everybody wants a little piece of the pie as well, and they want to be on the journey because it's cool, it's fun. Like, who wouldn't want to be on a rocket ship? So it's like all of a sudden someone's like, "Oh, I like what you're building. That sounds interesting. Could you just come and do that for my bank?" And you're like, "Well, I actually serve healthcare professionals. I don't serve banks." It's like, "Well, here's £500,000 to come and do it for my bank." And you're like, the founders are like, "Well, maybe I should be doing it for banks." And then somebody else comes and says, "Oh, I know you're in the UK geography, or you're in the Middle East, or you're whatever, but I want you to launch it in Asia." And you're like, "Well, actually, my focus is on healthcare in these jurisdictions, but you're going to pay me £500,000 to go and do it over here." So you're like, all of a sudden, and now the trouble is you're going to start losing your vision. You're going to start losing that vision. And because then you're like, everybody in the company's like, "What are we then? I thought we were healthcare, but the CEO's now got me writing code for a banking thing." And it's like, the healthcare customers are thinking, "Well, hang on a sec. I thought, this was specifically for me, but, that seems to have become lost." And actually, because so much money has been, if somebody gives you £500,000 to develop something, they want their pound of flesh. And so those developers are now moving off of the healthcare stuff, and and before you know it, you've got 2 or 3 of these kind of new directions. You've completely lost product market fit. And you become less scalable, and what you've got is a bit of a Frankenstein of a vision, and that isn't product market fit. And that happens a lot to founders, especially as they scale, when they get into that kind of Series A, Series B phase.
That's intriguing. Like, I would imagine you sitting in a VC seat, like if you've got a board seat on the startup, if a bank came in, I don't know, maybe I'm talking out of turn, but I know a lot of VCs who'd be like pushing the founder down that route and chase the pound notes. Would you advise then, like in that circumstance, would you advise the founder to turn down the bank and stick to their vision?
I didn't say that, did I? I didn't say that. I didn't say it was easy. I can only define the problem. It's like for the founders to do the decision. So yeah, I think that the way in which it's done, it has to become very deliberate in the decision made. And so for stepping back slightly, a good example of this, Mark Randolph at Netflix talks about it a lot when he was building Netflix with Reed Hastings. And for Netflix, and it's a really easy example, Netflix starts to be successful with their DVDs through the post. And then there's a big push for them to do things like go to Canada, or like do physical on-premise things within supermarkets or whatever. And Mark Randolph talks about this being the Canada problem, in that they think they can increase revenues by 10% by going to Canada, but as soon as they do that, they immediately start to dilute the time spent within the US. Actually, the physical premises for the Netflix kind of DVD boxes was really popular when they did the pilot, but they choose not to do it because it's taking away from the core vision of being a DVD through the post subscription service. So these decisions are not easy. These decisions are really hard. I mean, for companies like Netflix, it was really, and for entrepreneurs as good as those guys, it was really, really hard. So I think that when you decide, actually, maybe this is right, is to be so deliberate about it. As you're like, okay, we've been offered this £500,000 from this financial services company to do this. What does that mean? What would that take? What does that do to the communication channels? What does that do to our sales teams? And you've got an option then, which is either you might turn around and go, I think this is a better opportunity. Healthcare is great, but healthcare doesn't have a huge amount of money.
Mm.
Financial services does have lots of money, and I genuinely believe in that. So you make that deliberate choice now. So you've either got to do that, or you have to sort of box off, and you have to try and stop contagion from going along. So I'm very keen for all my companies never to be blinkered. So never miss the opportunities around you. Many companies fall by the wayside because they've missed the opportunities around them. But I think it's the way in which you then actually build that into your strategy. The wrong thing to do would be to immediately jump into it and sign that contract. And then what happens to the website? Like, do we put financial services now on the website? I don't know. And the marketing team don't know what they're doing anymore because, they're not sure if they should be publicizing this things. It's always just taking a step back, understanding that it's going to have a lot of contagion, and then making sure that's the right decision for the company. But these are really tough decisions.
Yes. Yeah, I can imagine. I guess it's tough on when you're sat on the board as well to advise a company in that basis.
Yeah, I mean, I would say actually, when you're sat on the board, most of my time is spent telling companies to focus down on their core rather than focus down on their core rather than try and look at these new markets. Because again, it happens a lot when you're scaling. People think that big companies must have so much opportunity because they've got money and they've got people and they've got blah, blah, blah. But small companies have got much more opportunity by their very nature. They're small, they're nimble, they can go in all sorts of different directions. So it's much harder for the small company to maintain focus on what is important. So and I would read things like Ben Horowitz's Hard Thing About Hard Things. He talks about it a lot. But in terms of being very deliberate, being ring-fenced, and if you really think the opportunity is bigger than even potentially starting again and entering and angling into those markets. But actually on the boards, I would go the other way and say most of my time is like, hey, you're a 1 million ARR SaaS business or in a 1 million ARR cybersecurity business. You cannot approach 6 markets in 10 geographies. Like, that is not possible. You're going to have to choose a market and build a right to win there before you then jump over to the next one.
So that's intriguing. It sort of leads me on to something else I was going to ask. When you're assessing deals, are you looking for the focus of the founder and whether you feel that they're going to be able to achieve product market fit based on that focus? Is that like a key indicator? Because
I mean, our different VCs have different mandates. So our mandate is really to invest in companies once we've got strong indications of product market fit. So typically we're looking for the signs that I've put out there around problem solution, scalability, traction, which is why I think like the pre-seed investors are just so, God knows how they do it. I love all founders. Why I got into VCs because I think founders are brilliant and they're people that have this kind of weird risk tolerance to just kind of get stuff done and put themselves out there. I think it's amazing. So I just invest in everybody. If I was a pre-seed investor, I'd be absolutely terrible at it. But so I think for pre-seed investors, they have to, this is why they double down so much on the founders, to have really strong conviction within the problem that they are trying to solve for. But with a touch of the ability to be adaptable. So, I mean, it's kind of like these two forces pushing against each other. You want to kind of know that founder is the right person for that problem and that they've got a clear vision of what they're trying to do and how that will become scalable. But at the same time, some of my friends have started companies and bless them, they've gone for it. And I've just been like, they've just got this one idea, and like the best entrepreneurs don't have one idea. They have an idea that they can mold and then shape. And actually, the best entrepreneurs will test product market fit until they find it, and then they'll scale. Yes. So I think you have to have both those things.
So what are you looking for when you're assessing product market fit then? Is it like revenue? Like how are you measuring whether someone's achieved it?
I think revenue is a big part of it, and there's no getting away from that. I'd love to, I'd love to pretend as a like kind of late seed, Series A, Series B type investor. So it's not all about revenue. The first question that everyone's going to ask, or we ask, is like, what's the ARR? What's your annual recurring revenues? And if you're less than $500,000, then you're kind of To us, you're sort of seed, pre-seed, you're not late seed, and so probably be too early.
Mm.
That's only a little part of the puzzle, because the quality of the revenue and the growth in the revenue is way more important in many effects than the number. So, like, if I've got a company that's at 750,000 ARR that's growing super quickly, and you can see from the usage base of their customers and the retention rates of their customers that the customers love this thing, then that is a really strong indicator. So we over-index on things like gross revenue retention, net revenue retention, and usage data. Those metrics are super important to us. If you got a company that's like, I don't know, 1.5 million, twice the size in ARR, but actually their gross revenue retention is like 70%, it's going to be a pass for us, because actually your customers are coming to you. They're signing up because maybe they think there's something here, maybe they're doing the trials, whatever it might be, but they're not sticking with you. It's a big leaky bucket. So I'm always conscious as well, and I think the Legora founder talked about this when they first started their legal tech business, which was like they wanted to make sure that they had a very sticky product before they scaled, and they actually sort of stopped doing sales until such time as they knew they had product market fit. And what they did is, because you can never ever solve growth. You can never ever solve poor retention through growth, because you just make all the problems worse, and eventually you come unstuck because you have to throw so much money into actually sales and marketing to keep revenue flowing in. If it's coming out the other, customers are not sticking, it's coming out the other end, then it's like it's just a waste, and you'll eventually come unstuck, and you'll have burned a huge amount of money in the process. I think lots of companies found that out in 2020 and 2021, etc. Yeah, revenue clearly very important, but not revenue alone. Quality of revenue as important, if not more important, than the actual number.
Okay. So when you're dealing with founders, do you notice things that successful founders do on the product market fit side, or is it more market driven, would you say?
I think successful founders are passionate for you to talk to their customers, and successful founders are not scared of you digging into their customer base and getting you to talk to them. Like, I would always say, like, if you want to take money from Octopus, you're not quite sure for whatever reason, it's like, talk to people that have taken my money in the past. Like, I want you to do that. And I'm not sure what they're going to say, but if they say bad stuff, then probably not the right investor for you. But if a founder is hesitant to kind of reveal that, that's quite alarming on the product market fit phase, as is, like usage data. So, I mean, sometimes early stage companies just don't have the systems in place to have that usage data, and that's why you have to probably over-index on customer interviews. And I would always encourage early stage founders, like, think about this, because if you can show strong usage data within it, then that's really beneficial. Yeah, so you also just get a sense of those founders who understand what scalability means. There's a lot of revenue-centric founders where it's just like, sell whatever we can, might even be tangential to this. That really worries me,
Really?
Because you end up just like, how much time are they going to waste on stuff that isn't important, or isn't important in the long term? And these are, as I say, these are really difficult decisions. And that's why I think that's so important with a company when you're thinking about product market fit, is like, scaling when you don't have it is really dangerous. You want scalability to be a very repeatable sales process and a sales momentum, at the same time as having a product that that when it sells, people use it and they carry on using it. If you're finding, like, in your customer base, people are not using it, or are not using it as frequently, or they're not getting good reviews back, pause before you scale.
Yeah.
Do you know what I mean? Because you're not going to make it better. If there's a problem at 100,000 worth of revenues, it's going to be a much bigger problem at 1 million, worth of revenues.
Yeah, that's for sure. That's an intriguing dilemma, because I speak to a lot of technical founders, and I'm sure you're the same, where they're so in search of that perfect product. They just want everything to be perfect before they're willing to push it out there. Do you see that as a big problem in the businesses that you invest in?
Yeah, it can be. I mean, I'm not clever enough to invest in this sort of deep tech kind of world and biotech and stuff, where that is, that's even more of a problem. If you're building quantum computers and you've got to try to find commercial applications for them and stuff like that, that's the other side of the office, who are all PhDs and say much smarter than me. a lot of our founders tend to be quite commercial, more sales focused. They've spotted a gap in the market, they've spotted a problem. And so, in the early stages of a company, distribution should trump product. All of what I've said stays true. You have to have a solution that is scalable, that isn't leaky, that people want and they want to renew and all that. But ultimately distribution will trump product in those early stages. I think what I have found in my investment career is that said, if you do not get the product right in the early stages, you might get you might get the distribution right, you might grow quickly, but if the product is built on sand, then that builds huge problems as you scale. And and not just sell, also exit. I've had exits blow up because the diligence people went into the product and they were like, the code is ancient, it's not scalable, it's creating massive latency. It's going to take 2 years worth of technical debt to get this up to anything that looks like a modern standard. And it's like, that might be because we have non-technical founders here, and actually, they didn't understand the technical side. They paid cheap for developers. They didn't ever really have a great CTO to start with. And so I think that, as I said, for growth, distribution will trump product, but ultimately the product has to be strong enough to hold up to scrutiny and then be able to scale. So it's worth investing in both.
Okay. If obviously you invest late seed, so most of your investments have product market fit already. What advice would you give to earlier stage when they're looking to try and achieve that product market fit?
Well, at least we hope they have product market fit. I think it's fair to say we've made investments in the past where we thought they had product market fit, and then it transpires they didn't. Really, the advice that I would give is to go down what we were talking about before, which is talk to lots of people, talk to lots of customers, but think about building what is going to scale. If you've this is a huge market, I don't know, maybe it's cybersecurity and financial services, for example. It's okay, that's a huge potential market, depending on who your customer base is. But where do we want to play within that market? What's our niche? Because then the best thing you're going to get as you grow as a small company, as you're finding product market fit, is that the references from one customer to the next. If you're a fintech and then you happen to have worked with, I don't know, HSBC, it's going to be much easier to sell into Lloyds and NatWest, et cetera, et cetera, et cetera. So it's those case studies become super, super important to be able to sort of stepstone into it. But then also, as well as that, I talk about this being something called tilt. Whereas think about how your product will then be able to tilt into other areas. The easiest example to think of is something like Amazon. Amazon was an online bookstore when there were no, if you said what's online book sales, it's the market was tiny when Amazon started in online book sales. But the tilt from books to CDs to stationery to the marketplace were everywhere. They had that vision as well. I think if you go into niches which are really important as you start to try and find product market fit, but then have no route out of those niches, that's quite a dangerous place to be. I've had various companies where maybe, I don't know, they work with, I'm trying to think of examples whereby I won't be, if anyone hears it, they won't tell me off because they'll think that's me. So I'd probably be a bit careful, but I don't know, you work with sports clubs or something. It's okay, there aren't that many. That population isn't huge. So is that a good niche to start? Well, it might be if you've then got a vision of how you then break out into other areas of sports or entertainment or something like that. But if you can't, then it's probably not a good niche to start from.
Yes. Okay. What would you say is the best example of a founder achieving product market fit in your portfolio at the moment?
Sorry, put me on the spot there. So I'm thinking of every company and I'm is there a better one than that? There might be a better one than that. There might be a better one than that. I really like what Heel's good at doing right now with using AI to do resourcing in the healthcare industry. Huge amount. If you think about this, it's you've got a huge amount of healthcare professionals within the UK. You've got a huge amount of hospitals desperate for healthcare professionals. And in the middle of all of that is all these agencies who are taking a large cut in order to kind of fulfill the middle person. And what Heel's good doing, basically going, look, hospitals, you have limited budgets and you want to reduce those budgets. Here are the healthcare professionals. We can use AI to match your resourcing requirements with the healthcare professionals, and no need for that agency in the middle. And like, obviously for hospitals, this is like, they're getting the same healthcare professionals, but they're saving huge amounts of money on the agency. I mean, what a great, what a great product market fit. Like
Yeah.
it's so, there's two sets of people that want each other. You know, the healthcare professionals don't want their wages going off to agency particularly, and the hospitals don't either. And so they've just got pure synergies there. And also we're in a world where, you know, healthcare is much more complicated and there is a much limited resource and an aging population. It's just got everything. Actually, it's a really neat example of where you've got clear product market fit, and they've done really well in a short space of time.
Yeah, fascinating.
Plus a
I always see.
Dubai-based founder as well, Edward. So there you go.
Oh, really?
Well, better
I'll
time.
look him up. I always see like those marketplace models where you're connecting two sides as almost like doubly hard, because you're trying to get product market fit on two sides, right? You've got two distinct sets of customers and a different go-to-market strategy. So like harder, but when you get it, it's like product market fit on steroids, because you've got two sides feeding the engine.
Yeah, absolutely. And you know, it's all about people that I've listened to. I'm no expert in it, so I'd be careful sort of claiming it's my own, but they're like, building the supply is really important before you kind of build the other side of the marketplace, the buyers, because, you know, buyers will not keep coming back to a pool. They might come once, they might come twice, they will not come a third time. And so if you don't have the supply, then it's impossible to build the marketplace.
Yes.
But we've got lots of other examples, I would say, within the portfolio as well. The company's doing really well, like Logify, which is kind of for companies for people that have multiple kind of holiday lets, and you know, they don't just want to let through Airbnb, probably because they've got a number of holiday lets and they maybe want to have their own websites and stuff like that. Well, Logify puts all that together. So I think that's another great product market fit. You know, people are struggling to manage and build all these different booking platforms and everything. There's a real pull there for a platform to enable them to do that, and Logify is doing really well at doing that. We've got a cybersecurity business called Cyber Operations, fairly recent investment, but what they're doing is looking at supply chain risk. So if you look at all the cybersecurity issues that go on right now, or a lot of them come through company supplier bases. You know, if you look at the M&S and the Co-op and all these big cybersecurity issues they've had in the UK, it's generally been because they've gone in through a supplier. A supplier has become, a supplier. And you often a supplier they don't even know they've got, because big corporations have got suppliers that people are using that they don't even realise that they've got. And that's where cyber operations comes in and basically detects where there might be chinks in the supply chain. And that's all done through kind of using AI to kind of automate the processes in which to discover the supplier base and then whether there might be risks within that. So they're showing strong product market fit as well.
Fascinating. I've seen people describe product market fit as like a feeling. Sometimes you don't know you've got it, but you look back and you feel, oh, you've got it. That resonates with me specifically in one of the businesses that we have. What steps can a founder go through to assess their state of fit in the market?
Big question. Yeah. I mean, I love that idea of a feeling, because it is. I mean, like, take you back to my wife's restaurant, which, as I said, this small restaurant where, like, we didn't know if anyone would turn up to it. It's like 7 courses, fixed menu every time it's open. It's never like you can't choose from a menu. It's just like you turn up, everyone has the same thing. And it's like, does anyone want that? It's like, does the people not want to just come in and order a burger rather than having some crazy dishes that my wife served up? And straight away, the big signals, and the same for whether you're a restaurant or you're a tech company or you're a clothing chain or whatever it might be, or you're a drinks company, it's like the customers just come and people start signing up, and it just like snowballs. And before you know it, customers refer other customers, and you end up with more leads than people know, than you can possibly know what to do with. I mean, I think, you know, you listen to like old school businesses in the UK, like B&Q, the hardware store, when they opened, it was like a whole new concept. They were not sure if people did it. And then on day one, the tills just started ringing and they were like, oh, we've obviously got something here. Innocent Smoothies story is the same. You know, like they put the Innocent Smoothie drinks out on their first counter and they just went immediately. And it's like, you just get that feeling. It's like customers love this. Quite often, like the signals when you don't have product market fit, we've talked about, like gross revenue retention is difficult. But also I think it's when, if sales are really hard, if it's really hard to sell something, often what founders do is then add another salesperson. It's like, must be, I don't know if you heard the dead horse analogy. It's like there's like the company is the horse, and there's like all the executives round the table looking at this dead horse, and like marketing are saying it's sales' fault, sales are saying it's like the CTO's fault. It's like the truth is it's just a dead horse. Like there's literally nothing you can do with this thing because nobody wants it. And sometimes you also get, founders are not quick enough to realize this. Like just like, guys, nobody wants this. That is the fundamental problem. No matter how good the salespeople are, how good the operations team are, it's just like nobody wants this. Yeah, the one thing I was going to say is that I think where founders in particularly tend to over-index on salespeople and under-index on marketing and lead generation. And if you're not getting the leads in, no amount of sales will help you.
Yes.
No amount of salespeople will help you. And actually, the more salespeople you add, the worse it gets, because now you've got maybe 5 leads, of which there's 5 salespeople haggling over them. It was hard when there was 1 salesperson to the 5 leads, but now there's 5 going over those 5 leads.
Yes.
And then before you know it, you're getting experienced salespeople to make outbound calls, which never works. And so, yeah, I'd say if you're not getting that kind of inbound interest through your marketing activities, then chances are you've not got product market fit. I know that's a sweeping statement, by the way. There are situations where that might not be the case, but in general, if lead generation is poor, then you don't have product market fit.
Yes. Yeah, I'd completely agree with that. But what I would say is that all is not lost if that is the case, because sometimes it's a real subtle tweak or a real slight pivot in the product or the offer that you're making. Same product, just a slightly different narrative. It just resonates with people, and then the leads start flowing. So yeah, I'd completely agree with that. But caveat that with it's not all is not lost. You just need to be nimble and be open to testing different.
Absolutely. Well, it comes back to what we said. We want founders to be like completely conflicted. We want founders to be fully focused on the problem they're trying to solve and why they're the right person for that problem. But we also want them not to be dogmatic and adaptable and change and change the idea. So it's like I 100% agree. Look at something like, I think was it Play-Doh is the famous example where like they just couldn't sell Play-Doh. Somebody had invented this stuff, and I think they were using it to use it to stick stuff or fill holes and somebody said, "Oh, my kids like playing with it," and they just like it's probably an extreme example, but they changed the whole purposing of Play-Doh to kids, and it just flew off the shelves. It's like this non-toxic kind of play stuff made from flour and water. Yeah, there's umpteen examples of that, how you just repurpose something slightly and all of a sudden it gets that feeling.
Yes. So just going to fire through with some like briefer questions now. What would you say is the clearest sign that businesses don't have product market fit? Like when they come to you and you can tell all of a sudden that they don't have it.
Customer retention.
Yeah.
Straight away. I think efficient lead generation and customer retention and just general burn. I mean, like if you want just like one headline metric of whether companies are healthy or not, it's like how much revenue you're adding and how much money you're burning. That should be around 1-to-1, in my world. I mean, it's very, very brief, but it's like you better be adding as much ARR and your recurring revenue as you are burning cash.
Yeah.
If you're not, something is fundamental wrong with your business. And it's probably that you don't have product market fit. It's like if you spent $10 million to get $1 million worth of revenue, you haven't got product market fit.
No.
Isn't good. That is not good use for capital.
Okay. And have you seen, like you talked about losing product market fit, have you seen a company lose it and then get it back, or is losing it fairly terminal in your experience?
I mean, loads of companies can. So I think it was the 3rd blog that I wrote around losing product market fit, about like my sort of advice on how you get product market fit back. It's hard, really, really hard. I mean, I think a good famous example of it is Lego. Obviously, Lego kind of lost its way, wasn't sure who its customers were, didn't think people wanted to play with Lego anymore. So over diversified into different areas, tried to build too many different products and yada, yada, yada. And then obviously Lego's been a huge success story over the last few years because they got back to actually what worked in the first place, which was kids love building Lego blocks. Who knew?
Yeah.
And you don't need tons and tons of different versions of it. So yeah, I think if you've lost product market fit, be very, it's about being very deliberate going forward. So Ben Horowitz talks a lot about this in The Hard Thing About Hard Things and about his journey. And I think that one of the things that he suggests, which I think is really important, is, and what he did with, I can't remember, Service Ops or whatever his company was at the time, was if I built the company today, what would it be? Like, stop. And in his case, he had basically a hardware company, server company. And he was like, if I built this company today, what would I do? I would get rid of all the hardware and I'd just take the software elements of what we have got and I would scale that instead. So I think if you're a founder that's lost product market fit, start with that question. What would I build today from what I know now? And then get rid of everything else. Take the risk. That might mean firing 90% of your team and building back up again. That's the right thing to do. It's very, very hard to do it if you try and find product market fit with all the dead wood still there.
Yes. Okay. Fascinating. Is there anything that we haven't covered that you think is valuable to include?
I don't think so. I've probably rambled way too much.
No, I think it's been
And
fascinating. Well, I found it fascinating.
thanks,
Who knows what?
you say that to all the Edwards. So,
Only the Edwards, though.
It's only the
You're the first one.
No, I don't think so. I think that the only thing I would add is that we try and, the nature of people like me talking about this stuff, we try and be very broad, and obviously everyone's case is very specific. So things will be very specific to your business that aren't quite right for the next. And so I completely recognize that as I'm making these statements about, starting again by getting rid of all the dead wood and building from now. It's like you might be thinking, a founder might be throwing the laptop across the thing thinking, well, that's all right for you, mate, but I can't possibly do that. I get that.
Yeah.
It's hard.
Maybe we need to put a disclaimer under this that don't throw everything out based on this advice.
Yeah. But yeah, one thing is get usage. Don't scale until you've got product market fit. Because
yes, I think that's really important advice. That I think founders, by their very nature, they want that growth. They want to keep scaling, keep moving forward, and sometimes, like you say, that can be fairly terminal for the longer term success because you're pouring money in and it's hemorrhaging out at the other end. So yeah, I'd completely agree with that statement. Okay, well, it's been great. I really appreciate your time jumping on, and I think we've covered some really interesting points and really delved deep into what product market fit is. I'd say you've got your blogs on the product market fit, and there's a few others I think on the
please. Well, I've got I've spoken at SaaStr a few times, and there's a SaaStr presentation online around losing product market fit that I did then. It's about half an hour. Pretty easy listen, I hope. Which kind of delves a bit more into it as well. Sorry, I shouldn't point people in other directions, should I? That's not good.
Let's point them onto the resources section of Octopus Ventures, and then I think from there, I'm sure they'll be able to find the other bits.
Sounds good.
Learn more. Well, really appreciate your time, and yeah, I hope everyone enjoys the episode.
Yes, thanks very much, Edward.
Thanks.